Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Philip Morris International, ticker is PM. Price at the point of filing is $90.75. This is not a recommendation, not advice. Please do your own diligence before investing into anything. And let's get right into it. Description: note all numbers are based on current FX rates. Euro $1.08, GBP $1.23, and JYP 1 to 130, $1 to 130. Sorry. Basic valuation: shares 1.55 billion times $90, $150 market cap, $140 billion market cap. Sorry. Net debt of 42 billion. This includes 700 million for the remaining 5% of Swedish match not owned on 12/31st 22, and 1.3 billion for the remaining payment to Altria for ICahn. TEV 182 billion. 2023 guidance. The US dollar currently trades slightly weaker than the 2022 daily average, so I'm excluding the negative FX effect from the guidance. EBITDA 23, 14.25 billion, 13.3 billion is organic, 915 million is from Swedish match. NOPAT 11.25 billion, 16.2x. Interest 1.5 billion, 800 million is from non-SM, 700 million is from SM. Taxes 2.65 billion. Net income 10.1 billion, 13.9x. 23 margins will be affected by a number of negative items. The most important is inflation. Under normal inflation conditions, PM will raise prices over inflation, but due to the high global inflation, PM is raising prices slower than inflation to maintain customers and market share. The OP margin will drop 1%, about 400 million. If and slash when inflation drops, I expect margins to return over a year or two. As well, the war in Ukraine continues to weigh on both the top line and the bottom line for both Russia and Ukraine results. The guidance expects total market ex USA and China of the combined 6/HNB units to decline 1 to 2%. This reflects a cyclical pessimism from 2019 to 22. The ROY fell 0.8% per year, and excluding Russia or Ukraine, it fell 0.5% per year. As HMB penetrates deeper and expands the population/frequency of users, I expect the TAM units to turn slightly positive. The core thesis is as follows. PM trades at 14x PE and 16x unlevered FCF and has a 5.6% dividend yield. Total market physical unit combined 6/HMB and growth will be flat or better as HMB growth expands or holds steady the combined market of 6/HMB. PM will gain market share in row combined 6/HMB due to its HMB dominance. 6/HMB will continue to take price at overinflation and margins will also expand. I expect HSD EBIT/unlevered free cash flow growth at 0% total market units, plus 4% price, minus assuming a return to normal inflation, plus 3% market share gains as 6 convert to HMB, plus 1% margin expansion. Earnings would then grow at LDD, although interest will be rising at low interest debt rolls into higher interest debt, so earnings growth will not significantly outperform EBIT growth. The analysis above also includes Nick Pouch's ZYN in the US, but it is a smaller component, and so I did not break it out. ZYN already dominates the market and will not grow market share, but the market will continue to grow quickly, and I expect ZYN sales to continue to grow 20% plus on a long runway. What is a business that is in a flat unit volumes, TAM plus inflation, 2% plus, pricing power plus accelerating market share gains worth? It is worth more than 16x unlevered FCF. I believe this core business should receive at least a lower consumer staple multiple in the 20 to 25x range. Based solely on the core thesis, I see PM as an attractive GARP opportunity. The stock is cheap regardless of what happens, with a more speculative prospects described below. Why does it trade where it does? I believe PM's multiple is being held low by the gravitational pull of the rest of the industry, e.g., MO and BTI. But the rest of the industry does not have the RRP portfolio of PM. MO in particular is a melting ice cube in units, not revenue, as it has failed thus far in its three attempts: Jewel, Ecos, and On. To establish a successful RRP product, it is trying again with its acquisition of Enjoy, but I expect it to go the way of On. Like On enjoys well quality and has little appeal. MO has terrible management and has been unable to create a product in house or acquire one and turn it into a success. So MO has turned into a bet on the offsetting race between lower volumes as cig smoking declines versus higher prices. And then throw in how much cash MO will burn in its attempts to establish a RRP foothold. FWIW, if Altria management promised to give up and never pursue another RRP, the stock would trade up 20%. The market has zero confidence in Altria's management. Smoking volumes in the US have declined at a faster rate than in ROW, and this is without HNB alternatives. On the flip side, price increase in the US have exceeded those in the ROW. As well, the federal, state, and local governments in the US have become far more aggressive in regulation and taxing of cigs, so we should expect the effect to be greater. Note, I'm referring to the time delta of policy, not the absolute level. For example, the US is seeking to implement a menthol cig ban at present, and California just implemented one last year. Most of the ROW has had a menthol cig ban for years. Most unlevered valuation is half of that of PM, but it is entirely different bet, and the success of PM's ICahn and Zin may mean the failure of LMO. BTI is more complex, and I can discuss at length in the thread. In short, BTI has aggressively pursued RRP products and have Nick pouches, vapes, and HMB offerings. However, they are still unprofitable in total despite significant market share in European vapes and Nick pouches. They do not break out, but I believe Euro Nick pouches is slightly profitable alone. Only two modern RRP products have achieved scale and high profitability in large markets: Swedish Match Zyn in the US and PM ICOS in the ROW. And now PM owns both. This is speculative thesis. There are five categories of RRPs. Number one, traditional oral. Number two, Nick pouches. Number three, closed vaping. And number four, open vaping. And number five, HMB. Below is a model of the current situation for PM. 6. Tread, oral, Nick pouches, HMB closed vaping. US, non-small dominant market, not developed, no presence. RW, 25% market share, small, weak, dominant, weak. Let's be clear. The ROW is not a monolithic block, and one brand or product type may be popular in Germany and another in South Korea. As well, there are some sub segments within these products, e.g., single use vapes versus pod vapes. It is a grossly simplistic model, but I find it helpful. Open system vaping has so far proven to be niche, and so none of the big players are focusing on it. I will ignore it. Traditional oral has mainly existed in the Scandinavian countries and the US. It is a flat to down unit business, and it does not look positioned to expand beyond its current markets due to the lack of an oral tobacco tradition. It is one thing to believe a Parisian will put a Nick pouch in their mouth. It is something else entirely to believe a Parisian will put a snus pouch in their mouth. Until its acquisition of Swedish Match, PM did not have a traditional oral product, but it now has some popular long-standing snus brands. I believe snus will expand in the US, and PM may be able to bring to other parts of the world as Nick pouches develop a tradition of oral nicotine. But this is not a large growth runway at present. So we have four big opportunities for PM. Number one, Nick pouches in ROW. Number two, HMB in US. 3 plus. 4, vaping in US and ROW. HMB in US. After decades of industry faults, PM successfully launched its HMB product, ICOS, and it now dominates the market in the ROW. However, Altria failed to successfully launch the same products in the US, and now a patent dispute with BTI has frozen the product in the US. In 22, Altria gave up and sold the rights to ICOS and the HTUs, heated tobacco units, to PM. It is unclear why HNB has not caught on in the US, like it did in Europe and Japan. I believe the main answer is lack of marketing and distribution, but Altria messed up the launch and never committed itself. This is a huge opportunity, and there's a good chance PM will eventually be successful if the patents do not stop them cold. Altria and PM lost at the ITC in late 21. The ITC decision does not validate the patents, but it does mean that a PM cannot import the devices. The ITC decision is under appeal, but I'm not optimistic it will be overturned. But there are quite a few pathways around the decision. PM will certainly challenge the validity of the two patents that BTI is applying. Foreign courts have already struck down these patents on grounds of obviousness versus expired patents and previous products. It is important to note that HMB products had been developed and marketed for decades before the success of ICOS. As with any litigation, this is a crapshot or crapshoot. I've read the two patents. One strikes me as clearly obvious, the other one is less clear. PM can design around the patent. In fact, the new induction rather than a blade system of the ICOS Illuma product seems to design around the weaker of the two patents. PM can manufacture the devices in the US and obviate the ITC ruling. This still leaves the patent case, and BTI could eventually get an injunction or royalties and go play golf together. Oh no, sorry, or royalties. PM also has a lot of patents and has already successfully sued BTI. So there could be a big meeting where everyone threatens and insults everyone else, and then they settle and go play golf together. My guess is that this is the likely outcome. Handicapping all this is very difficult, and I'm not an expert, but PM clearly has a plan, or they would not have bought out Altria. And they sound confident that they will be bringing ICOS to the US soon. Nick Pouches and ROW. The purchase of Swedish Match has two strategic benefits in addition to owning the fast growing and very profitable Zyn in the US. Number one, PM now has a distribution platform to launch nicotine products in the US. This is especially interesting when combined with their purchase of Altria of ICahn from Altria of ICOS in the US. Number two, as well, PM can use its distribution platform in the ROW to seek market share in Nick pouches. While Zyn has been widely successful in the US, it has not been very successful in the rest of the world, including its home base, Scandinavia. I expect PM to relaunch Nick pouches in the rest of the world and try to build market share with Swedish Match product knowledge and possibly brands. The market is still developing outside Scandinavia, but PM is behind. I expect they can use their marketing slash distribution muscle to give themselves a fighting chance to take share in rest of the world Nick pouches to turn it into a profitable segment. PM discusses this directly on the latest quarterly call. I should note that PM does not have one Nick pouch brand on its own, Shiro, so it is not entirely ignorant of the market. Rest of the world vaping. PM has made clear that its focus currently is less on vaping than the other two opportunities. Part of this is developing regulation, and part of this is their experience in products. PM entered the vaping market in rest of the world with Vive. Versus other closed system vaping options, it is a high end experience. My experience is that it blows away, pun intended, every other closed pod vaping system in the US and in Europe. It is pricey, both device and pods, but it is a better product. The flavors are more mature, and while they have semi sweet flavors, they are not as artificially sweet as competitors. No cotton candy. Unfortunately, they misjudged the market badly. Vaping sales versus all other segments, RP and SIGs, are heavily weighted towards the young, under 25, including underage. And Vive will not resonate with this segment. If vaping does swim upstream to an older, wealthier segment, I believe Vive will be well positioned. PM has launched Viba, a single use vape, to compete with the current popular options. Like Nick Pouches, we will see if PM's marketing distribution muscle will enable it to take market share in the quickly growing market. I also think regulation may help PM here, as it may be better positioned if some countries' EU crack down on the sweet flavored single use vapes targeted at youth. Finally, there is US vaping. PM has no current dog in this fight, and due to the chaos of US vaping regulation at the moment, I do not expect it to enter the market for at least a year and probably 2 years. The good news is the market is being blown up at present and will need to reform after order is restored. It looks increasingly like a flavored, including mint, closed system vapes will not be allowed in the US. However, a Fifth Circuit decision issued yesterday calls this into question as the FDA PMTA process for vapes is being subjected to harsh criticisms. This may aid PM in taking market share when it does enter the market, but the market may be smaller as a result. This is the toughest market to figure out as the current situation is the Wild West. The FDA is not enforcing its decisions. Soon, Nick has swarmed the market. It is a total mess. When the dust settles and there is legal clarity, I expect PM to enter. They need to file PMTAs, the fray. Catalyst: I do not expect an immediate re rate of the stock on the core thesis. This thesis has been out there for a long time. The results are picking up steam as ICahn grows and takes market share in the combined SIG slash HNB market, and this should prove a slow catalyst. The big catalyst is a successful launch of ICahn in the US in the next year. The new catalyst would be an aggressive relaunch into the ROW Nick pouches market. Risks. The main risk is the core thesis is that there's a move against HNB. It is difficult to see how HNB is more dangerous than SIGs, but it is really safer. But is it really safer? And what happens if it is deemed by a government or consumers as no safer? The war in Ukraine is another risk to the core thesis. If PM were to lose both the Ukraine and Russia business forever, it would reduce the value by HSD percentage. Menthol HTUs are about to be banned in the EU. I expect this to have little impact on sales, but it is a risk. Thank you very much for tuning in. See you next time. Please write down in the comments below what you think of this